Do you want to know the one easy way to invest in stock market? The way is easy, but you need to follow 9 steps in that. I'm just going to share about an interesting book which I read, and which works along with my principles of what Warren Buffett is saying and what I believe. And he is also a big follower of Warren Buffett. I'm saying about Dando Investor. It's one of the wonderful book. It's a very simple book and written for Indian audience. I will say, please go and read this book. Written by Monish Pabrai. He's having Pabrai Investments, which has done exceptionally well. I think since 1990s or early 2000 he started, and till now he has delivered humongous return. We can't say on par with Warren Buffett, but on par with returns aspect. So, hi, hello, this is Ganesh Senturu, your stock market profit coach and author of the book One Page Stock Market Plan. This is my book. Please go and check it out in the description. And today I'm just going to share about an interesting book which I read. And this is an easy way to invest in stock market. And this is followed by a person who follows Warren Buffett. So it means even now this is working. And this book was written I think in 2006. For a very long time I used to see this book, but I never read. But once I knew about Monish Pabra, I thought, let me read this book. What is there in it? I just wanted to see. That is how I started reading this book. He said the concept called Dando Investing. What he did is that he just toss a coin, and heads I win, tails I don't lose much. Did you get the point? Heads I win, tails I don't lose much. You should invest in those kind of stocks where the losses are very very minimal or nothing. So this is called as Dando Investing, and he takes an analogy of Gujaratis, the Patels who went to US and Canada and set up their motels, kind of hotels, because it will be on the long ways, highways, and they will be selling at. They'll be having a separate place for eating and everything, and people can stay for a day or two or a week, and the cost will be low. And how they become profitable, how they are occupying, I think, almost close to more than $1 billion of earnings they are earning, and they're paying taxes in billions, and they had grown like anything. And they follow the simple concept of Dando Investing, which is nothing but heads I win, tails I don't lose much. I'm just going to share everything in a point by point. This is what followed. And if you stay till the end, I'll be showing all the 9 points put together so you can follow what are those points, right? So the first point is invest in existing business. Do you get the point? Very simple. Existing business which is running cash flow, which is doing good, buy that. Or else it will be like, if you don't know the business, if you don't know what it is, and it will be really difficult if the cash flow is infrequent. Say for example, irrespective of corona, you should forget about corona, irrespective of any other situation, demonetization or infrequent floods or whatever change in taxation. It should not affect your business. It should keep flowing. There may be a temporary blip. It should keep moving. That should be the idea behind having these kind of business. So the first point is invest in a simple existing business. Second point is, along with that, simple business. Very simple. I am selling my product, you should give me my money. And very simple, once I give my product, you should get your money back, right? So that is what is called a simple business. If it is very complex, like I should put my money, I should develop everything, and after a month or 2 or 6 months, if I get my money back, or if it takes 3 to 5 years, it's not a business to be in, right? Very simple concepts it's all about. Okay, the second point is very simple to understand. The third point is invest in distressed business, distressed industries. You should understand a lot before you jump into this point, because most of the time, if the distressed industry, for example, uh, he has quoted example of all big companies which is in US, and all the industries which has gone through the distress times, meaning the industry would have gone down. The best example in the current scenario may be Tata Motors. Tata Motors is a very great company. Tata Sons is owning it, is a owner of the company. And when it was around 50 rupees in 2020, few people just bought 100 stocks or 200 stocks. But knowing that it is from Tata's, and knowing that they will do anything to revive the company. And if you had analyzed certain articles in the newspaper, magazines, if you had jumped and invested a lot of amount in that company, it's a big bet, but it's like a simple business. Heads I win, tails I don't lose much. From 50 rupees, the market was distressed and it starts moving. They had the early mover advantage. If you are able to understand and analyze these points, you would have already invested, and now you may be sitting in a huge profit, 10 times profit right now, right? 5,000 rupees, if you had invested right now, it would have been touching 50,000 rupees just within a span of 1 year. Just to think of 5,000 becoming 50,000. In fixed deposits, you may be getting not even 500 rupees. Okay, even in a 10 years timeline, impossible. Here you are getting in within a span of 1 year, because you identified distress industry, you invested. And the second point is invest in business with durable moats. Again, durable moats is nothing but, what if there is heavy competition, how far you are staying advantageous. Say there are enough competition but still you are staying advantageous compared to the rest of the companies. That is called as moat. The Pidilite in India, where it's a monopoly, nobody is, no competition is there. And in case of EV vehicles, Tata Motors has a huge moat because the rest of the companies are far ahead. It can be competitive. Right now, it's a small moat. It can be eroded once Maruti is jumping in, once Tesla is coming in, once other companies are jumping in. Till now, it's called as a small moat. There are enough examples of these kind of things. Once you start exploring, you will get what is a moat and how you can also find these kind of companies. And few bets, big bets, and infrequent bets. I'm not going to jump on all the stocks. I'm not going to put my money in 30, 40, 50, 60 companies. I'm going to invest my money in three companies for 3 years or 6 years or 10 years. I'll stay invested and it will grow like anything. That is what I'm looking at, right? Few bets, big bets, and infrequent. I'm not putting my money every frequently. I'm not churning it again and again. Leave the money for it to work. Say if you're a trader, you would have entered Tata Motors at 50 rupees, exited at 60 rupees, then again at 100, again exiting at 120. Just think of that is what the traders will do. But if you have been an investor, you would have captured, entered at 50, stayed at least till 400, 500. Just think of your money is grown multifold and there is no cost involved. You would have bought at 50 rupees for few costs, and if you are exiting completely, there is a few cost involved. But if you have been trading again and again, you may be incurring losses also, because of market condition, because of profit booking. In between there are so many things, because stock market is not one way line, it goes up and down, up and down, but in 1 year it is straight way up, right? That's how the market works. So, and also fixate on arbitrage. Say you are buying something, you are selling only in profit. That is called as my understanding on arbitrage, because arbitrage is nothing but, in mutual funds we have arbitrage mutual funds. What they do is they buy in derivative and sell it in cash, so you get a difference, and that percentage you make it as a profit. Similarly, you buy something, sell it in profit, and exit in profit. That is what it all means. And margin of safety is always there. As I told, you bought Tata Motors at 50 rupees, and the book value was way high, and though the debt and everything was there, but believing that company, believing that bigger Jaguar Land Rover and the sales, and why it has come down because of the lockdown and economic crisis. All these points you should have thought that this company is really doing good, and there is a possibility. And if capital infusion is coming from Tata Sons, automatically this stock can grow up. All these points is that it can grow up, right? Simple. And invest in low risk, high uncertainty business. The same company, high uncertainty. Why? Because from BS4, India has pushed, government has pushed all the companies to BS6. It's a huge shift. And also the EV push, the electricity vehicle push, it also happening at the same time. So the investments required for all the companies are huge. So Tata Motors, uncertainty has driven the stock because of Corona. It's a high uncertain time. That is a time when automobile sales had dropped, and it was completely shut down. But Tata Motors has been launching new vehicles even during the last 1.5 years, and they've taken a strong position by launching the new vehicles, right? And there is a high uncertainty because of, right now it's a chip shortage. Earlier it used to be currency shortage, currency issues, because Tata Motors is having a parent company in Europe, and they sell it in China and in India. So all these are uncertain areas. So whenever there is uncertainty, the stock price will decline and jump on. That is what you should do. And finally, invest in copycats rather than innovators. Innovators means, there are companies who has patents. In the case of pharma companies, for the next 5 years they will be so, the company price will keep moving higher and higher. After a certain point of time, the stock price will decline, because everyone can copy the formula patent, and the patent will expire. That is when all the biosimilars will come, all the companies will jump on, and they lose their numero uno position. Don't look at all those kind of companies. The advantage may be there for the 2 to 3 years timeline, but invest in companies who copycats, meaning they just copy the process, they copy the things and keep doing again and again and again. That's it. So let me show you all the 9 points together. Invest in existing business, let it be a simple business. Invest in distressed business which is having durable moats, few big and infrequent bets. Okay, and arbitrage, you should have a profitability point and margin of safety is there, low risk, high uncertainty is there, and invest in copycats rather than innovators. If you're looking at new companies, it can be too good, but after a certain point of time, what will happen to that thing? So choose companies wisely, following all these 9 points. Put a tick mark in all these things. So finally, you will end up having a easy way to find one stock or two stocks, maybe five stocks, and look at investing for few years. Stay together, and for sure, you should find a stock which is at valuation. This is something different. You should do all those stuff. But these are the 9 points you can follow, and just think of so many companies which is running in your mind. You can post your questions, and that is when you will start exploring about investing in stock market. And I can help you in my own way, so that you can also join my course and check the description if you want to join my course and learn a lot of stuff on stock market and learn most importantly how to make money without losing money in stock market. Thank you so much for watching.